start talking about the leadership sectors, and the leadership sector in this current bull market up until now has been hands down PSU. Across the board, from metals to defense, even insurance PSUs, everything in the PSU space has gone up like a rising tide phenomena. Some of that may be catching up in terms of defense PSUs at least, right, in the last couple of weeks. Do you feel like the leadership mantle will continue to be carried by PSU stocks over the next 2 to 3 years, or do you feel like it's now time to take profits off the table from PSU names across the board?
So I think it's a lot more nuanced out there. There are certain pockets where valuations have clearly gone up significantly. So from a fundamental perspective, if you look at it, there are certain pockets which are monopoly stocks, no doubt, where the near-term outlook is really good. But if they're trading at, say, 15, 17 times price to book, these are very, very heady valuations. Just as a context, the infra cycle peaked at about 7, 8 times in 2007-8. So we are well past those levels when it comes to pockets like in defense. But on the other hand, if you look at, say, energy and utilities, or oil and gas or oil and marketing companies, their valuations are a lot more sanguine. We really haven't, while they have performed, no doubt, but we haven't seen those kind of parabolic moves in a lot of those spaces. So I think it is not to say that the trade is completely over and out, but yes, we do prefer the private sector franchises wherever we can over many in the public sector franchises. But I wouldn't say that the entire pack is primed for a massive kind of a correction. We do still think that there are pockets within the PSU space that are very attractive and which we continue to own in our various funds.
Right. Talking about a PSU fund that you also have under your umbrella, 85% gains. I mean, that's phenomenal. I know that a lot of fund managers would have missed out on the PSU rally because of underexposure. For those investors in that fund, what do you recommend they should do? Should they continue to go in and invest into the fund, or maybe take profits off the table? It's a very specific question, but it's about 5,000-6,000 crores of AUA that you handle.
That's right. So I think to all our investors, we are saying the same thing, which is to elongate your investment horizons. Don't extrapolate the past returns. The good thing about the PSU fund is that there is some amount of dividend flow through that comes through, which is still quite large compared to many other spaces which are there in the non-PSU space. But one should definitely be prepared for an underwhelming kind of an outlook when it comes to the next 6, 12, 18 months, and not extrapolate what the investors have seen over the course of the last 1-2 years. So as long as people are prepared for that, I still think that this is a space that can give you decent returns over the course of the next 3-5 years. I mean, is it a place wherein you can put in massive lump sum at this point of time? Possibly not. One should be a lot more disciplined. Like I said, this is the time to take down risk rather than embrace risk head along across all our equity products.